Hi everyone, welcome to another episode of the Change podcast where we introduce you to people and ideas shaping the MENA region. Today we'll be talking about the regional startup scene, about venture capitals, how do we here in Middle East compare with the Silicon Valley, what are the good investment opportunities going forward, and also how to secure those investments. My guest today is Basil Moftah, General Partner at Global Ventures and Dubai-based growth stage venture capital firm. Previously, Basil was the president of Intellectual Property and Science Division at Thomson Reuters. Prior to this, he managed emerging markets for Reuters, $600 million business spanning Latin, Middle East and Africa, Russia, India and China. Wow. He is an experienced investor, advisor and a board member of numerous global technology companies. Basil, thank you for coming.
Look, it's great to be here.
How are you? How's your week so far?
The week has been busy. I think as we run up to the Christmas period and so on, and the next week's holidays as well, I think it's a busy time.
Everyone is trying to secure their peace of mind over the Christmas holidays, so they're trying to finish everything before we go on the break.
Yeah, we started to see that in Q2, where because Q2 was a lot of stuff was shut down, and only kind of relationships you already had were the ones that you can continue to talk to them. All of a sudden the demand, whether it's from the startups or from the LPs in terms of any things that they need, has just all come flooding in Q4.
Amazing. So the Change podcast, I'm happy that you are on this episode. We'll be talking about a couple of interesting topics close to my heart and to the audience that is listening to the Change podcast. Usually how we start all of our episodes is introducing our guests as individuals, and bringing everyone closer to your story. And now when we were doing our preparations for the podcast, you told me that there is an interesting part of your life where you spent around 5 years in Silicon Valley in a VC over there, and you were involved in the investment made to Yahoo at the time. Obviously there is a certain romantic feeling about VCs in Silicon Valley back at that time of the boom, and the internet. So can you tell us a bit more about that, and then we'll talk more about the rest of your career and how you ended up in this town?
No, sure. Happy to. I mean, listen, I'll start off by saying I didn't know anything about venture capital when I got into venture capital. So I was an engineering graduate, studied mechanical engineering, love processes, and decided that I didn't want to be an engineer. I wanted to do something different, and I wanted a more international career. And as fortune may have it, I ended up with a job at a corporate venture capital for Reuters Corporation, which is the news agency. I'm sure you know about it. They had put aside $400 million back in 1995, 96, that they wanted to invest in this thing called the internet, right? Wow. And back then, I'm sure people remember the green screens, and at universities, ICQ and some of those old-fashioned tools. And Reuters was actually not scared, but worried how this internet was going to impact its business, because the business was built on private networks, was built on content that you had to pay for. Nothing was for free at Reuters, and a lot of it still isn't, for that matter. But the bottom line was, the internet looked like a huge threat. Anyway, I applied, I got into it. Don't ask me how. It's a little bit of luck, a little bit of them looking for people with international perspectives. But I ended up being this student from Egypt, working, first of all, for the first 6 months in London, and then for the next kind of 3-4 years out of San Francisco in this venture capital arm. And I didn't know what we were doing. I didn't know exactly what this all meant. But I guess I had a little bit of a knack for evaluating ideas, right? And I guess being younger than the kind of partners of the fund, so I was just an analyst associate, I was young. I would look at things very quickly and go like, that's never going to work on the internet, and that was going to work. And I guess that was my value add, not the financial analysis, right? It was more just the gut of having, grown up with having access to those tools, which maybe the corporation didn't understand. Anyway, it was an amazing experience. I mean, it had its ups and it had its downs. The high moments were investing in Yahoo, like you said. That's a $5 million check that we wrote to a company that wrote its business plan on a dot matrix printer, which I'm sure some people on this podcast won't even know what a dot matrix printer is, but it's a very old-fashioned type of printer. And it was a 5 pages plan. We gave them $5 million. The idea was, they're going to give away news for free. We better invest in this and make sure that they don't give away everything. And actually, we worked with Yahoo to shape it. So Yahoo Finance has a lot of Reuters data in it until today. And it was kind of the idea that the data will be 15 minutes delayed, so that, professionals who need real-time data still come to Reuters, but, non-professionals or just me and you on the internet, we can still look up the prices of stocks, but it wouldn't be something that you could trade because of the 15-minute window. That $5 million made us $450 million, if you can believe that, right?
God.
So
those were the times, huh?
Well, there's some still good stories going on, but the bottom line was that, especially that amount of money at that time, was an unbelievable return. And I think that gave a lot of confidence to Reuters, to the team, to all of us, that there's real opportunity. We also invested in WebEx.
Wow.
Which then IPO'd, which then got bought by Cisco. So that was also a great, a great story for Tom. And we thought WebEx was all about, are people going to talk on the phone, or are people going to speak over the internet, right? And again, the connectivity was really poor then. So WebEx had done an amazing job to at least figure out how telephony could work over an IP network. We did Netscape, which again is a company that easily dates people. If they, I've have some people on the team at Global Ventures today who, when I say Netscape, they're like, "What's that?" It's a Chrome browser, but it was the first browser, right? The first professional browser there. That did well for us. So anyway, there's a series of really good investments, and then I can give you the names of all the rest, but you wouldn't recognize a single one because it was an 80 company portfolio. So we had 80 companies in total. I think 5 or 6 were hugely successful, and maybe another 5 or 6 did well. Everything else failed. And in California, in San Francisco at the time, that was normal. The idea was, you tried, it didn't work, you shut it down, you move on to the next idea or the next concept. Or you try the same idea but in a different way with maybe different investors' money, and so on. And I remember very specifically this entrepreneur in California coming to me one time and said, "This is my 3rd startup. I failed on the first one. I failed on the second one. I'm ready to now be successful," right? And that was kind of the pride that comes with it, which I have to say makes San Francisco in particular, just a very unique place in the world.
No, for sure. Yeah, we'll be talking more about the San Francisco at the time, the San Francisco today, and the startup scene and the whole startup VC scene today in the Middle East. No, I'm sure that the time in Silicon Valley at the time was amazing, and especially when you made an investment of $5 million.
Yeah.
You made $450 million, which basically justifies how many failed investments, let's say 20, 30, 50 up to 100 investments between million and 5 million. So there is still a math behind these kind of investments. And then fast forward 20, 30 years. How many? This is 20 years later. You are in Dubai. You've spent around 10 years with Thomson Reuters.
Yeah, I was there about 15 years.
15 years altogether. At your peak of the career with them, you were president for intellectual property and science, right? Research.
There was a division of Thomson Reuters called IP and Science, Intellectual Property and Science. It's a $1 billion division, 4,500 employees around the world, and has an EBITDA of around $320 million.
Wow.
Very profitable, great business. Didn't grow so fast, so it was growing at 3%, 4% per annum, predominantly driven by its own, its existing customers buying more. And our clients were universities, especially the PhD programs where people are doing scientific research and they're doing scientific discovery, if you want, innovation and so on. A lot of corporate R&D departments. So those are the departments in charge of coming up with new products, patenting those ideas and taking them to the market, if you like, or working with the company to take them to the market. But it was global: China, Europe, Middle East, the US, of course, and so on. The interesting thing about IP and science is it really opened up my eyes to how does innovation happen, because people want to still believe that innovation is predominantly driven by that brilliant person or that brilliant idea that somehow a light bulb, lights up above their heads. And it's really not true. It's really, really not true. Innovation is just like any process in the world is a factory, right? There are people responsible to, discover new chemicals, and there are people, responsible for, pushing the boundaries of physics and so on. And those are, fundamental researchers at universities. And then you kind of move over to the corporate world where they take all of these new discoveries and find the commercial application for it. So if you discover a new material that has amazing properties, like it's very bendable, can you make a mobile phone out of that flips open, or, like the ones we're seeing with Galaxy now coming out? That's a new material that someone had to spend years of their life. It could actually be their only achievement during their life to discover a material that can be used to make a bendable screen, for example. It really opened my eyes, and it became amazing to watch what's happening. Now, during the time I was there, which was 2014 to 2016, China was on fire, right? It was our fastest growing business. I think I visited China 10, 12, maybe 15 times, who knows? The amount of research that they were consuming, the amount of data and products they wanted from Reuters, or Thomson Reuters, I should say, IP and Science Division, was really incredible. Fortunately or unfortunately, the company had decided to exit the business. So somewhere, halfway through my time there, the board notified me that they're looking to exit the business, and we hired bankers and we hired consultants and did all the preparatory work to put the business on offer to the market. And Thomson Reuters ultimately sold it in 2016 for about $3.5 billion. A private equity fund out of Canada bought it. And they've actually now taken it public. So it's now been rebranded to Clarivate Analytics. So if you go online and look up Clarivate, you'll find all the wonderful products that they offer and services that they offer.
How much are they worth now?
They're probably worth, so they merged with another company, which was also worth about $3 or $4 billion. So let's say in total, the capital put together was about 7. It's trading at about 9.5, 10 billion the last time I checked. Maybe even higher. I really haven't seen, especially the last few weeks, the market and the stock market has been rallying. So I'm sure they're above the 10 billion mark at this point.
It's interesting now when I'm listening to you and your experience, how we're putting up a profile of a general partner behind the VC fund. So you started as a junior analyst, right?
That's right.
Again, it was part of Reuters, right? And then you were in San Francisco analyzing the ideas, and you were getting that kind of experience, analyzing hundreds of ideas. But then over the 15 years later on with Thomson and Reuters, you got the analytical part of the numbers behind, basically proving that these startups are not happening only by chance, right?
For sure.
I mean, there is a lot of method behind the madness, and that can be controllable, right? If you put a right process around it, you can increase your chances of coming up with solid ideas for products, services, and improvement of business.
Absolutely. I couldn't agree more. I mean, first of all, let's differentiate. There is something called commercial innovation, and there's something called scientific or research-based innovation. And in this part of the world, especially in the Middle East, a lot, if not most, startups are on the commercial innovation part, right? Which is kind of like, oh, it takes me so long to pay my parking bills. I'm going to create an app to make it easier to pay parking bills. That's not scientific research. That is solving a problem, has value, for sure. And the idea can be wonderful, like Kareem grew or Su grew, or, we can talk about the startups in the region later. But all of those were real problems. Some of them copycats, so be it, it doesn't matter. But they're commercial innovations. Scientific innovation, which is far more valuable and far more process-driven, if you like, is where you are spending time doing university level research, PhD programs that are established to investigate how to get to the moon or how to get to Mars or how to, create a foldable, display, if you like, on a mobile phone or whatever the case, or new types of food, how to make meat it's not made out of meat, right?
What makes it more valuable than the commercial one? Because when I'm thinking about commercial, you're thinking about billions. Immediately I'm coming up with a new software or an app. We're going on a market, we're exiting for 500 million, and that's it.
The protection.
protection.
Yeah. So scientific-based research is protected globally and understood to be protected by patents. So
Okay.
you can't patent a software and say my software is, you cannot, that someone can't create the same idea. So if you create a ride-hailing app, somebody else can do it. The winner becomes the one who can raise capital quicker, who can spend marketing, who makes it maybe a bit more easier to use or friendly to the users. And don't get me wrong, there's value there. I don't want someone to walk away going, oh, he doesn't believe in commercial innovation. Of course there's commercial innovation. But with scientific innovation, you get issued a patent in the country or countries that you operate. You have 20 plus years and sometimes more of defensible
Royalties for
your idea, or if you commercialize it yourself, then you can make billions.
So that's a win-win if you tackle both.
Correct.
Commercial and the
if you do both together, that's where you get the Teslas of this world, right? So it's not just about building a car. Anybody can build a car, but it's about the battery, it's about the suspension systems, it's about all of this. You patent those things together, and now you have something that's outside of everybody's outside of everybody's ability to compete with you.
Yeah, and if we're bringing this now innovation as a concept into perspective, and I've talked with 50% of my podcasts were about innovation in some shape or form, and then we're always trying to crack that answer. What's the answer to successfully innovating within the corporation, and then within the country, and then within the region? What makes some regions and countries more successful in innovating than the others in the output that they're producing, based on your experience so far?
Yeah, the average age of an entrepreneur in the US or in Europe is actually mid-40s, 42, 43 years old.
Oh, really?
That's the average age, right? And that in itself is one of the, things or facts that really surprises investors in general, right?
That's considered high.
It's considered high.
Yeah.
Because I think people think innovation and entrepreneurship has something to do with being young and kind of unencumbered ideas of how the world should be. And surely it does. And there have been some amazing entrepreneurs who've discovered amazing things in their 20s or in their teens even. But the reality is the average the average entrepreneur is around that mid-40s range. And that, once you think about it for a second and kind of, think, what does that mean? It means they have experience, right? They have experience in an industry, or they have experience in something. Then they discover a problem that really frustrated them in their job, right? So I was the guy responsible for operations at Dubai ports, and I'm running all the ships coming in and out. And I spend, 5 hours a day filling out forms. This is silly. I don't have to fill out forms. I'm going to create a camera that can take pictures of the ships and automatically read the label on the ship and put it in the form. And you know what? I can sit in my office and put my feet up. And then they go a step further, like, I'm going to quit my job and I'm just going to do this as a business for all the the ports around the world. Its experience really does matter, right? Now, does the entrepreneur alone have to have experience? No. So we look at management teams as a whole, and we think about the experience they bring collectively. Somebody may know technology, somebody may know an industry, somebody may know how to build businesses in terms of sales or other things. So it takes a combination of people, but you also look at their advisors, their board, and their investors. So it takes a village to be successful. I think the US still takes the high marks for how quickly and how prevalent it occurs. There's innovators. It starts from a young age, right? Kids at the age of 5 and 6 are standing on street corners selling lemonade. That's entrepreneurship,
Typical
right?
Typical example of
and then they figure out pink lemonade. That works better. It sells for 5 cents more. And I'll do blue lemonade and I'll put some flavoring in it or whatever it is, and all of a sudden you look at the shelves of a supermarket today in the US and it's got lemonade in every color and every flavor that you can imagine. So they start at a young age, and then there's an entire system of VCs, investors, advisors, and so on that occur. I think I look at my kids sitting here in Dubai. I can't get him to get off his iPad, let alone start a lemonade stand. Why should he start a lemonade stand? So we're not fostering entrepreneurship at a young age. And the whole ecosystem still needs to be developed in terms of advisors and investors, and the whole thing just has a long way to go still.
I see. And so So I wanted to understand, and so if you there is a culture of entrepreneurship that is definitely being grown in if we take United States as an example.
Sure.
From the early days, I mean, we all know that even kids after they're 18 or 21, they're leaving their homes. There is a culture of kind of pushing them to be independent, right? And then that makes them as well, try different endeavors and try different businesses. There's this interesting book called Outliers that is explaining the background behind some global successes.
Yes.
And there is a number now, I read it a long time ago, but basically what it's saying, out of top 100 billionaires in the world, there is 70% that has a similar type of background, similar type of
There's
timing.
a pattern.
There is a pattern that can be seen, right? No, I went away from my topic, initial question of innovation. But if you need to put together and put the relation between the innovation that happens on a corporate level and the entrepreneurship and startups, can you make some connections there?
Yeah. So let's put it this way: start with some basics. Does more money or less money drive innovation?
Okay.
Right. So it's actually, in my opinion, it's less money, not more money. Because if there's an abundance of capital, people get lazy, right? They don't really think hard. They don't make priority calls. They don't make decisions. So one of the characteristics in Outliers, and you'll see it amongst really successful entrepreneurs, is it was never built on, I had an idea and I had a lot of money to make it happen. Right? It started off with, I had an idea, I had a little bit of capital, and I had to make some really tough decisions. And in those decisions, I learned what works, what doesn't. I learned to listen to my customers, and I learned to get over obstacles and build resilience in it. Corporations generally suffer from the issue of, well, I've got a relatively decent budget, like I'm going to put money into innovation, and yet they find that the results are not as great. While entrepreneurs starting on their own, raising a little bit of capital, maybe from friends and family, end up being much more successful without the resources that the corporate has. So one of the fundamental things is, how do you create that sort of drive towards solving the problem, but not trying to solve it by just throwing a ton of cash at it, right? But driving by really listening to your clients and really understanding what is the solution that's going to work for the customers. So I guess to answer your question, I think corporates in general, besides the bureaucracy and besides the kind of, the things that I think most people would know about that stall them and make it difficult for open-minded or very, free-thinking individuals to thrive, because they have to, fill out 10 forms and sit in 20 budgets meetings in order to explain why they need, $500,000 to create a new product. And, as an entrepreneur gets $500,000, knows that they're not going to get any more capital, right, until they prove success, and spends all day not filling out budget forms, but trying to solve the problem, right? How do I solve it? How do I do it? And if I spend $5,000, am I gonna get something in return for that or not?
No, that makes sense. I mean, when you are forced to, you're either going to solve the problem or you're going to basically fail or die. That's when probably the best solutions are coming on the surface.
Need and is the mother of all innovation, right? If you really need to do something, you will find a way to get it done. As my kids tell me and show me all the time.
Part of the audience that is coming from corporations are not going to cancel this episode. They're against cutting budgets, but I think that the point and the message that we're sending across is spot on.
No, but listen, I mean, don't get me wrong. You look at some corporations, and again, I'll take the ones that I know a little bit. I think people know about them, but are closer to my area, which is technology. A place like Apple, right, is able to innovate regularly new products. They haven't done it once and just created the iPod, but they created the iPhone and the MacBook, and I don't know, and the Apple Watch and so on. And again, it's because they've created a culture in which, when you're innovating, you need to break some rules. You can't make it bureaucratic. You need to create it with really clear milestones and gatekeeping, and make sure that the person who's innovating realizes that once they spend that $500,000 or $1 million that you've given them, either they've proven that they can solve the problem or it's over.
It's over,
right? And if you put their career on the line as well, you'll be surprised how well they'll solve it.
For sure. That's an interesting take on that. So, all right. So today you're a general partner of Global Ventures. There is a lot of things that happened in the meantime between San Francisco and where are you today? But long story short, here you are running and managing a global venture, which is a Middle Eastern venture capital fund. Can you bring us closer to your role and to the fund itself?
Yeah. Global Ventures is built on the idea that there are really good entrepreneurs in this part of the world who haven't had the same access to capital that others around the world have. And more importantly, don't have the same access to relationships and networks that other entrepreneurs have. Remember, I said earlier, it takes kind of a village to be successful. Anybody who thinks they can do it just on their own, it's just making it more difficult for themselves, honestly. You need advisors, you need relationships with other companies, introductions, and so on that make your life easier as an entrepreneur. And Global Ventures tries to provide both. So it's a VC that is based out of the UAE, but we have offices in Saudi and in Egypt. And increasingly, we're looking at sub-Saharan Africa right now. So we're going to also be venturing into parts of Africa. We've done one deal, actually a second deal just closed a few days ago. So we're 2 deals into Africa, but we're investing predominantly, let's say, in the Middle East and Africa region, and trying to give the entrepreneurs the capital they need to build their business. And we're also trying to give them access to resources and tools. So we have a value creation team. We have something called the library, which is this online research tool that they can log into and see all the different relationships and people we know, people that I've met personally over my career, that my partner or co-founder of Global Ventures, Noor, is also putting her database of contacts. We make introductions, we facilitate. A lot of times these are super valuable relationships that people can build on, right? So there are lots and lots of examples there to talk about. We've raised our first fund. It's a $50 million fund. We've deployed our first fund. So we've already done something around 21 investments, if you count the one that I just mentioned. And that's kind of our first fund done. We're still holding some money from first fund because there's something called follow-on investments that we need to be ready to defend our rights and put additional capital if we see some of these companies doing well. And now we are actually raising our second fund. It's also going to be a $50 million fund, maybe a little bit bigger. It has an interesting focus, so we can talk about that a little bit later. But what we're in the process of raising, what's really cool about Fund 2 is that we now have our first U.S. institutional money coming into Fund 2, which is super exciting because U.S. institutions are a whole other game. I mean, raising funds from local family offices or individuals or even from some of the government entities here is hard work, but U.S. institutions are real professionals at this game. And so we're super excited to have them on board.
Can you, you did explain me personally before the show what this actually means, but can you just unpack that a bit more for the audience, because I think it's an important milestone for the region.
Yeah, it is. I do see it as a milestone, and I do see it as a testament. I mean, to how the technology scene is changing in the Middle East and Africa region. Because it's the first time somebody from the US who allocates capital decides to allocate some of that capital to this part of the world. So let's just take a step back. So there's this institutions are fund of funds. So they're kind of our investors, if you like. And they're the ones who put money into us. And just like startups, we have to go out and fundraise and pitch and do it. And we have to have a story to tell. And the story we would tell, is, well, you're investing in the US, but that's a very expensive market. Yes, sure, you get good returns there, but you're paying very high prices. What happens if the market kind of, doesn't do so well? Europe has and the US VC market is obviously 30 years old. Institutions have been allocating to it for the last 10 years. European VC market is a little bit younger, and people have been allocating it, institutions have been allocating for the last 5, 6, 7 years. Asia has also seen a big bulk of investment. Middle East has been one of the places where people have been reluctant. They don't know enough. They didn't see a real big tech scene, so they're like, why should we invest there? How many companies are there? And now, it's a testament to the fact that the ecosystem is really developing and is really reaching a stage where you're catching the eye of U.S. institutions. I hope it's the first of many, and not just for global ventures, but for all the VC funds to be able to raise capital from deeply pocketed institutions, right?
Which is amazing for the market itself and for all the startups seeking support. And what I love about global ventures is that you are providing not only capital, but you're providing actual support. Now, there is a lot of VCs who are committing or promising, but I don't want to say how many, but not all of them are actually living to the promise of actually giving you support. And I remember when we were trying to raise some capital for a couple of businesses, we were less concerned about the capital itself. We were more concerned about who will be our partner, because actually what we were looking for is what you said: relationships, introductions, advisory, mentorship. This is what a startup needs more than the capital. Capital, let's say, can be found. Sometimes it's even less of a trouble than finding a right partner. And I think that's amazing, really. So talking about the startup scene and VC culture here in the region, and obviously on the back of a couple of big successes that happened over the previous couple of years, led by Karim, which exited for 3 billion, right? And then
3 and change.
Yeah, 3. Exactly. I can keep the change. I wouldn't mind.
We can all keep the change.
and there is recently, I think InstaShop did the exit around 360 million, etc. So there is a certain hype happening, and it's exciting. And I think that there is more and more every day. I'm receiving a newsletter from Magnet saying about some startup raising some funds, and there's a lot of hype going on. Sometimes we will like to think of this region as a new Silicon Valley, right? If you compare what's going on here with the Silicon Valley, is it comparable? Are we the new Silicon Valley?
There's nowhere in the world that compares to Silicon Valley. I'll be very blunt and very straightforward about it. I guess lots of places have tried to be Silicon Valley, and that is a glorified image of somehow a perfectly functioning ecosystem of investors and technologists and so on and so on. The reality is that Silicon Valley has its own troubles as well, and we can talk about those in a second. But it's such a unique place. I lived and I worked there and for 5 years, and I was a VC. I went to the meetups and I dealt with entrepreneurs and other venture capitalists and really was involved. And this part of the world, as the rest of the world, is very far from being a Silicon Valley.
But what's the thing with Silicon Valley? What makes it so?
No, it's a great question. And so let's start off with the basics, right? The basics are that Silicon Valley is built on the promise kind of not just that the capital being available, but that the talent is also available, right? And the talent meaning only the best survive in Silicon Valley, right? So if you're a good technologist, if you know how to write code, 90% of the entrepreneurs we would meet and invest are the programmers themselves, right? They're the actual developers. They have an idea of something they want to build. And they've used the internet or they've built software before, they worked for other companies, and then they want to sort of venture on their own. Here, you see a lot more business, right? So I used to work for Procter & Gamble, or I used to work for some multinational in the region. And I think I have a business problem to solve, but I'm not even sure how to build it. I have an idea, but I'm not sure how to build it.
Sometimes I even have some cash.
And sometimes I have some cash. Yeah, I've made some savings. I've got my kind of payouts or whatever, and I'm using that. So that's one of the elements is people, just the type of people that you're meeting, right? And entrepreneurs are in Silicon Valley very scrappy, right? So there's no glamour. It's a very expensive place to live, by the way, just kind of like Dubai, but nonetheless, they're not spending it on driving nice cars I've met entrepreneurs here that were kind of, after our meeting, we're walking to the parking lot and they're in a Jaguar or something. I'm like, okay, exactly. The need is not there, right? The desire to win, the desire to
and then invest.
So, I talked about how need is kind of the necessity. You see it in the individuals, that you meet there. But the other fundamentals are there. There's a lot more capital available. People understand the element of risk. When someone fails, it's not the end of their reputation. It's not the end of their career. It's not the end of their life. Actually, when they come to fail, they literally call up the investors and say, I don't think this is working. I'm running out of money. I'm not gonna raise any more capital. I'm gonna shut this down, and I'm gonna move on, right? And interestingly enough, it's the ones who handle that failure well, who end up raising money from the same investors, right? Because the investor wants a relationship with an entrepreneur where it's very transparent and very open, where you're not trying to, cover up for what's happening and come up with excuses and blame others. You want to say, my idea did not work. And here are the 3 reasons it didn't work. It wasn't the right time, or it wasn't the right technology stack, or it wasn't the customer problem wasn't what I thought it was. And, I've lost you $500,000 or $1 million or $5 million for that matter, right? But I believe this idea is not going to work. I'm moving on. Now, by the way, I discovered a new problem, right?
Along the way, yeah.
Along the way. And I think it's worthy. But rather than, use this, you try to kind of raise capital and make the cap table complicated and all of that, I'm going to raise fresh capital in a fresh company. It's the only country in the world which has something called Chapter 7.
What's Chapter 7?
It's a type of bankruptcy law that allows you to shut down a company that's failing in an orderly way very rapidly. Right? There's Chapter 7 and Chapter 11, actually. I should mention both of them. So in the US, when you find yourself at a situation where you're no longer able to continue with the business and there's no capital, you have a legal system to shut it down very rapidly, very cost effectively, and do right by all the parties in a fair kind of system, if you want. There's nothing fair. People lose money, right? Let's just
of course, yeah, but
people lose their jobs and so on. But there's a certain level of protection that allows the entrepreneur to say, I was the person responsible for the company, but I'm not liable to the company's problems, if that makes sense. I failed at the idea. I didn't fail as an individual. That changes the perspective. Here, when somebody walks up to you and says, I failed at this business, or you hear about somebody who started a restaurant and didn't do well, the culture isn't built to kind of like, let's say, let's do another restaurant together.
Yeah, exactly.
You're like, no, that guy doesn't know how to run restaurants, or that person, isn't going to be successful. And that's not true. Actually, the experience they've gained from the first one could be exactly the reason why they do well on the second one. So people, culture, legal, capital, there's just so many gaps to talk about that I think we're a long way from it. I don't want to end this on a negative note. We've made a lot of progress in the last 3 years. So the last 3-4 years here in the Middle East has seen tremendous progress. The number of innovators, entrepreneurs, the number of government entities allocating capital into the sector, the number of individuals, family offices, corporations. I'm sure on your show, you've had amazing people talking about all sorts of new things that they're investing that they wouldn't have done 5 years ago.
For sure.
Because the need is there. Investing in real estate is no longer that easy and profitable. Starting a new factory doesn't make the kind of returns you were expecting. So we need to look for new sectors, and technology is really getting its share.
For sure. And it's interesting that you mentioned this culture of not kind of embracing failure, because my next episode will be with one interesting guest. We are going to talk about that. There is a certain, and it can be seen around this region. And I'm not sure how we ended up here. That failure is not accepted, and it's not. Nobody's talking about their failures because it's either embarrassing or your surrounding doesn't want to accept it. But that's the starting point for innovating and improving. To say, yes, I failed. I'm going to give it another shot. I'm smarter now.
Or here's what I've learned.
Here's what I've learned. Yeah.
If you have the brains or the intellectual capacity to understand why something didn't work, then actually you are a better person by definition. Because learning is the only way humans evolve. Learning is the only way in essence, it is the fuel of curiosity, or it is the driver of curiosity and so on, right? You're curious to learn, and when you learn, you get more curious, and that cycle never stops. failure shouldn't be so stigmatized. Now, let's just be clear. There are two types of failures, right? There's a failure because, I committed fraud, or I hid something, or I wasn't honest. And that's a failure that should be stigmatized. That should lead to jail, right? But there's a failure between, I told you I was going to build a restaurant or a software company or whatever it is. I took money from you as my investor. And then I went and I built it. And you know what? It didn't work, right? And people didn't come. They didn't like the food, right? They didn't think the service was good. Whatever the output. If you sit at the end of it and say, look, I'm going to shut this restaurant because it's not working. But I've learned that, people really don't like food from Latin America, or, but they really did like the meat. They enjoyed the meat. So I'm going to open up a meat restaurant. That learning is valuable. It's the reason to invest. So yeah, it's a shame. It's a cultural thing. It's not unique to our region. I think I think the US is unique in that sense, right?
Well, maybe that's true, actually, yeah.
And I think the rest of the world is kind of got this stigmatism around failure. But we need to create an environment where, and an infrastructure, and a legal infrastructure and so on, where people can fail, shut it down, do it in a proper way, and move on and use those learnings for the next thing.
But maybe it's a bit of a pressure as well, because we are living, especially in the country that has grown, that was not seen in a history probably around the world, that someone experienced such a growth and advancement when it comes to all of the parts of the economy. And maybe it's a bit of a pressure as well that we cannot fail. We need to be better and better every day and come up with new things without failure. So who knows? It's an interesting topic to be discussed. You mentioned in the one of your answers about copycats, and there is always, when you're coming up with an idea, usually, if you're not doing this scientific kind of innovation, chances that your idea doesn't exist somewhere else are very slim.
For sure.
To come up, even so many times I woke up and this idea can't exist anywhere in the world. You search, first result is the idea that you came up with. How do VCs, so when startups are approaching you with the ideas that are obviously, call them copycats or already proven concepts in other parts of the world, how do you look at those kind of startups? Is there something what do you think about that? Or in general,
Listen, emulation is a great way to start a business, and there's nothing wrong. You've seen an idea in Japan, China, US, whatever, and you think this idea could work here. It's not a bad way to start something. But the question that we always ask ourselves, we look at a number of things, but one of the things we look at, has it been localized? Does this idea just a copy, or is there something actually that makes it fit to our region, right? And Careem is a great example of a company that emulated Uber, but solved local problems, like people who want to pay by cash, while Uber was always by just credit card. And so you couldn't set up an account without a credit card, which for people in the region who pay by cash, that doesn't make any sense. So they had to work out, how do you get cash, and how does the driver then return it to Careem? And there's a whole money cycle they had to solve. Or female drivers for female passengers, another thing that's very local to us in the region, but very important. And that created unique customers for them, which they could use to build the business until it became a fully fledged ride hailing opportunity across the region. I guess what I'd say to you is, if you don't have the protection of scientific innovation and patents and so on, then you need to find other ways to build unique selling propositions, USPs, and build what's called a moat.
What's that?
A moat is kind of like, your business is like a castle or like a tiny fort. So you build a moat around it of water, right? So in the classical,
something that protects you from being marginalized later on.
Exactly. How do you stop yourself being marginalized? And how do you do that? Most moats other competitors can copy as well. So the question for an entrepreneur in the region is, how do you create several of them, and how do you do it quickly enough, right?
Yeah.
Until you're strong enough, until you're big enough, your brand is out there, your customer base is loyal, and others start to really depend on you, and then you have a proper, protection to your business. But in the early stage, we're thinking about, okay, so great idea, we love what you're doing, but tell me how you're going to execute it, and how you're going to protect yourself from somebody else just copying your idea.
How early do you invest with Global Ventures?
So we're what's called early stage investors, Series A, Series B. which is kind of the growth stage. So the idea
Revenue
is
generating, yeah.
revenue generating. The idea is usually validated at that point. There are customers and they're paying and all that stuff. But we do some earlier stage. So we've done seed investments, and especially in the fintech space, because financial technology has a very different dynamic in terms of its growth. So if you don't get in early, the valuations go crazy and so on. So we've done a bit of early stage seed is much more based on the entrepreneur, based on the idea and the execution and the plan. Maybe they have a bit of product to show you, but not much. At the stages A and B that we look at, we can have a proper discussion about, okay, so what did you do? Oh, I went into Saudi first, or I went into Kuwait, or I'm launching in Egypt, and this is how I built my mode. I took those consumers, I signed a partnership with so and so. These are all valuable things that show us the entrepreneur is building protection, even if it's not long-term sustainable, but it gives initial defensibility to the business to grow.
I see, it makes sense. And from your previous answer, I picked up two interesting things. So, all right, obviously there is, not that many new business models that you can come up with that don't exist anywhere in the world. But what's unique about the region, and it's giving you a unique opportunity, is that it's very specific because of the language. And Arabic speaking people are a majority, and then Arabization of your idea or tools that you're introducing, that's a good opportunity, and that you need to protect yourself in as many ways as possible. And we got a question once, actually every time that we pitched for something, how much time would it take to another company to build what you build if they have unlimited resources and money? Yeah. And that's a very simple question that can test your idea. Yeah. Because usually the answer is to build what you have, not going to take them a lot of time. So I guess it's about getting to the market as quickly as possible and capturing the good portion of the market before someone else appears.
No, for sure, execution. I mean, it absolutely. And you see an entrepreneur who work, you quickly find out which entrepreneurs work night and day and which ones
come in
a Jaguar, exactly, and which ones are dedicated to the cause, because yes, execution and speed of execution is definitely one of the differentiators.
And so in the region, especially in Dubai, we noticed a way of this delivery type of startups, delivery this, delivery that. There is the logistics, yes, and we're basically, and it's for consumers, it's amazing. We can really order whatever, and get everything delivered. But from the perspective of strategy and investments, when it comes to these big fights between the leaders in the market, obviously, I think you can. Based on the benefits that you're receiving as a consumer, you can notice that it's obviously funded from some external funds to allow you this kind of service. But what's the strategy? Because at one point you're either going to make it or you're going to lose big time. Examples of Uber, for example, it's not profitable. It's not a profitable company, and there is a reason why they're so affordable. Currently, we have a lot of food delivery apps around town. What's the strategy when you're making these kind of investments? What are you hoping to achieve?
Listen, it's a great question. So, and again, it depends on the horizon, right? So let me answer it in a very philosophical way, and then let me give you a very practical way. The philosophical way is, in any idea, give it enough time and enough money, somebody else can copy and take away that. So what ultimately the only surviving measurement is what's called NPS, Net Promoter Score, which is the kind of how do your customers feel about your product and services, right? And by the way, when you get those surveys that you see that say, would you recommend this product to a colleague or to a friend? Please, or how likely are you to recommend this product to a colleague or friend? On a scale of 1 to 10, that is an NPS survey. And it's proven to be the most reliable long-term business value that you can measure, right? Because if you're loyal, right? I use Deliveroo. I know many times I get things from, Talabat and from others with all sorts of crazy promotions. I'm just loyal. I'm one of their most profitable customers on the face of the planet. I'm sure they could deliver for free all the food that I order from them, they make enough money off of me. So you're building loyalty because I like the product, I like the service, it's very reliable. I like the fact that I can track and do, and I don't have any of this other messiness that other products. And others have gotten better, but I still have that loyalty. And NPS is a measurement of loyalty. That's the very philosophical. As an investor, though, you think slightly differently, right? Because yes, you want to build loyalty, but more importantly, there are different owners and different investors for different stages of a company. So in the early stage, when we get involved, we're also thinking about who's the best buyer of this business in 3, 4, 5 years. So I need this business to be high growth. I need this business to perform well and to build a very large customer base in those 3, 4, 5 years that I'm thinking about, so that a bigger owner, a strategic owner, will come and buy that business off of us, if that makes sense. So do I care about NPS? Sure, I care about NPS. And of course, we have to build a business that has a great service. But I'm willing to buy with my investment, growth. And that includes subsidizing clients to come on board, because once you try it, you're going to love it. And then once you love it, I think in the beginning, Deliveroo used to give me all these coupons. They kind of stopped lately, except when I miss a delivery. But at the beginning, they gave me all these promotions to make me, to build up my usage so that I can really fall in love with their product. That's acceptable. And that's kind of what you do at the early stage. Now that Deliveroo, I don't know, has how many users, somebody else may say, this is a very valuable business, or they go public, or whatever the kind of liquidity event for them may be. So I'm answering your question in the pragmatic sense. In early stage, growth matters.
Yeah.
And sometimes you want to fund that growth. Now, some businesses are crazy. I've seen entrepreneurs who are willing to pay $3 for every dollar that they get. That's ridiculous, right? Or $5 or $7. I guess for me, there's an acceptable rate, right? And you look and analyze, what does that look like? If you're paying $1.10 to get $1 in for the first year or two, and then in later years, you're only ending up paying 70, 60 for every dollar you bring in, then that's an acceptable return, right?
For sure.
So you're looking for improvements in that profitability and the return on investment.
Well, what happens eventually? Is it Uber profitable at the moment?
I don't think so.
So what's the end game? Becoming a monopoly, complete monopoly, and then eventually becoming profitable. But when are you getting the whole return on the investment that you made when we're talking about these giants, which are always interesting to discuss about?
Yeah, the giants are always interesting to discuss, but the giants always have a different way to look at them, which is complicated to think about. First of all, let's not forget, Uber went through quite a rough management change, right? Because the investors were not happy with what they saw. Now, some of it was related to sexual discrimination and sexual harassment and a really poor culture, which is completely unacceptable. And by the way, one of the drawbacks of Silicon Valley has been this reputation that it's built a little bit of the masochistic kind of environment that it is, and something that needs to change for sure. But Uber itself came under a lot of pressure from its shareholders, even with the new management team, to achieve profitability at a faster rate. So you can't escape paying somebody back at some point for money that they've given you. So they sold their China unit and competition with Didi, and it became a joint venture. And in many areas of the world, they kind of exited or quietly kind of shut down operations. So they are under pressure to go profitable, and that doesn't go away. But what you also need to understand is that there are economics of very large corporations that very large entities can afford that smaller entities cannot afford. And those are things, and that requires a lot of capital to get there, including the cost of capital. So today, if somebody is lending money to Uber and making a 2, 3, 4% return versus putting it in the bank and getting 0% return, right? That's a good return for them. And so they're willing to give them money to do so. So built into the model of Uber is not just growth, the growth is quite high, but built into that model is as a use of capital that returns to investors, a dividend, if you want, in the background.
But eventually they're seeking profitability,
of course,
right?
You have to pay back the capital.
Yeah.
So people can say, I'll give me the interest, that's great for me, but at some point you're going to have to pay me back that capital, and to do so, they have to become profitable.
Okay. I think, I mean, this is definitely a topic we could have a whole episode on this.
I know.
I don't want to mention WeWork now.
Listen, WeWork is interesting as well. I mean, you should have a look at the detailed presentation that was given by WeWork during the IPO. Now, again, failed IPO. People criticized it. A lot of it was around the entrepreneur and around kind of his, and his profile and kind of his very grand vision and how he was investing in all sorts of crazy things. School and I don't know, yachts and all sorts of things, and that they felt was not really a focused business. Fair enough. If you look at the fundamentals of WeWork pre-COVID, right, and you look at some of the sectors that they served, especially in the large enterprise sector, it's a hugely profitable business. And let's put it this way, shared space and co-working space isn't going away. So maybe WeWork doesn't have the exact right model that investors are looking for, or maybe WeWork was getting into too many long-term leases and kind of being way aggressive, a bit like Uber. But the idea itself, and in certain customer segments, it makes a lot of sense. Companies aren't going to, and no way after COVID, going to get into let's buy real estate or let's rent real estate around the world in big amounts. Everybody, is thinking about, I'll keep a small office, people work from home, and then I'll give them an access card to these shared workspaces. So I think WeWork is going to be fine. I think in the end of it, it's going to turn out to be, and I believe has some really fundamental great business.
Obviously, we can separate the whole episode on the WeWork, and I read this interesting article of how all of these investments into WeWork impacted the other businesses of a similar kind, and then there is a whole story about that part. But all right, we don't have a lot of time to waste for our audience, so I'm gonna step into another topic and our last one, and it's about what happened this year, 2020. Huge amount of challenges, but opportunities as well. And it's an interesting perspective from a VC. There was a lot of talk how this is the great time for investing. And obviously there were some great opportunities out there, but it's hard to make a call where to invest, how to invest, etc. From your perspective, what pandemic brought? How did you approach it?
First of all, obviously this year is unprecedented, and everybody, we've all lived it, so there's no need to talk about it more. But it has had, it's been very difficult for many people, and I really hope that we quickly kind of recover the economy and people get back to work, especially people who lost their jobs. And so there's a lot of unfortunate stories. That being said, I've seen this year a lot of startups and a lot of technology companies having some of their best years, because working from home and the future of work and e-commerce and all of those industries and sectors have benefited from the fact that we were locked down and so on. We believe at Global Ventures that digital health will have a huge success going forward, because we believe that the idea of going to a hospital and waiting in line and all of that doesn't make sense anymore. Maybe you go once or you go for your tests, but when you need to speak to the doctor, you can do that from anywhere. So we think digital health and telemedicine will have an opportunity. E-pharma, just like e-commerce, is also another opportunity. So we see a lot of things that are positive. We also believe that edutech will also benefit a lot. So people need to learn, and if you lose your job and you're looking for a new job, what do you do in the meantime? Most people commit themselves to learning something, a language or so on. But now it's not become let me learn French or let me learn Spanish. It's become let me learn programming or let me learn digital marketing. Where do you go and how do you do it? And if you can't travel or go to a school or can't afford it, you have lots of wonderful edtech platforms developing and developed, growing, and so on that are doing well. Future of work and the way we work, right? I mean, here you and I are sitting in a studio talking face to face. We could have as easily done it on Zoom. We could have as easily done it in a number of different ways. Big banks are announcing that they're no longer going to keep their offices and people just work from home. So the way we connect, the way we relate to each other, the future of work will really change. And food security is probably the last one I'll touch on, which is around, if supply chains get disrupted, right, and you have countries running out of food, you can no longer rely on those supply chains during a pandemic, right? So how do you make sure food is closer to home and closer to the source of consumption? Which, by the way, turns out to be it's also friendly for the environment to do so, because these ships aren't, going all around the world burning diesel. But at the same time, vertical farming, agri-tech, that whole sector, I think we're just at the beginning of that story. So long answer to your question, lots of opportunities, lots of flourishing business, lots of things happening. And I'll just wrap up kind of on this point. In January of every year, Philip from Magnet and I take a bet with each other. We do it publicly. It's like a session we do with some of his customers and some of his readers. And we take a bet about, will this year be higher or lower than last year in terms of the number of deals, in terms of the amount of money invested in the Middle East and North Africa region, and a bunch of whole metrics, right? And I think he'll say he won, but I'm sure I'm the one who won. We need to check our notes. But this year we've already surpassed the amount of money that's gone into, VCs have invested into startups. We've already surpassed a number of deals.
Wow.
Right? And we're on track, I believe, to hit $1 billion plus this year. We'll be the first year to see $1 billion of capital in the region go into investments. So what does that all mean? I think it means that technology and VC investing has really come into its age. It's really becoming a fundamental part of our economy here in this part of the world.
Wow, that's right. So the year wasn't that bad, actually. Right?
That's the thing. And the stock market, oh my God. I mean, I don't know what to say. It's gonna be the year to remember, the one we talk about to our kids.
Yeah. I don't think this crisis will be the same like the one that we went through in 2008. I think this one brought a lot more benefits.
The other one was a particular sector. It was the banking sector. This is a crisis that hit everybody. And
forced us to change.
Yeah, and listen, lots of people lost their lives. It's a very unfortunate, but now with the vaccine coming out, silver linings in the future. Human race is when in time of need, it will always find a way to innovate and grow out of it and solve the problems.
For sure. So my last question before we wrap up is, obviously there will be a lot of startups out there listening to this episode. So what advice would you give them when it comes to raising funds going forward, having in mind that rules of the game slightly changed and there are different now perspectives going forward? Sure. And what are you looking for?
Listen, it's a great question. I'm kind of trying not to repeat the things that people read on websites and entrepreneurs always listen to people talking about. I'll use something that I find, a statistic that I find very interesting, which is again from the US, unfortunately, but being the leader in this space, I think it's good to look at those statistics. The average life of a marriage is shorter than the average VC investment in the US, right? It's kind of a joke, but it kind of tells you a little bit about the relationship, right? You're going to spend more time, probably more hours and more back and forth and ups and downs with your VC and your investor than you're going to spend with your loved one, husband or wife or whatever the case. And I think the message in it is, how would you want your relationship to be like? Do you want it? What makes a successful relationship? Is it built on honesty? Is it built on truth? Is it built on listening and taking advice and learning and developing together? Or is it based on just sell me an idea and I give you some money? Right, and the latter never works. You can't just sell me an idea and I give you some money and everything disappears. So all during the run up to the investment phase, we are very conscious as investors to think about, is this somebody I want to be in a relationship with? You may be the ideal company. You may be the ideal person. You may have everything, which nobody has, by the way. So let's start with that. But even if you are, it doesn't mean you're the right relationship, and we're not the right relationship to be in together. So I really tell entrepreneurs, pick your investors. You're going to live with them for a long time and base the relationships on the fundamentals of what a marriage would be like.
Well, I think that's awesome answer. Thanks. Thank you for coming.
Thanks.
Thank you for staying with us until the end. I really hope that you picked up some good inspirations and insights from this podcast. If you like what we're doing with the Change Podcast, please like and subscribe. Make sure to reach out with any questions in the comments below. We're going to make sure to answer them. And if you have an interesting idea for Basil, reach out. He'll be happy to listen it. Until next Monday, be well and see you with another interesting guest. Thanks again, Basil, for coming.
Thank you so much for having me. It's wonderful.
Thank you. Take care. Bye.
Bye.